Hello, everybody. Brian Coester here, CoesterVMS. This is a video kind of made because of the fact that we have so many people who email me and had questions about the webinar we did for HousingWire yesterday. Was very well attended. So we had 1,500 people who registered for it. Over 100 questions submitted during the event. Great job, Matt, Alan, Zach. Did an amazing job kind of talking about the industry, talking about what's going on when it comes to the future. Well, one of the big things that I received feedback on is, well, what would happen with the new administration, right? So what will happen with Dodd-Frank under the new administration? What will happen on AMCs? Well, how will that affect the current AMC model and within the industry? And most importantly, a lot of appraisers want to know, well, how is this going to change? And so I think there's a lot of misconception around, and I'm kind of really just it's very misguided, because what happens is when you have misguided information or around like a particular topic, you're stuck with this idea that this is true, but it's really not. So let's talk about what would happen if, to the current AMC model, if Dodd-Frank was repealed under the new administration. So you got to think about, well, when it comes to the AMC's role in the industry, they were primarily a function to serve the regional and national lenders. So you have a situation pre-HVCC, all your major big banks, all of your regionals and online lenders were already using appraisal management companies. What you had, though, is brokers who represent about 50% of the originations, as well as community banks that played a much larger role in the space at the time. And you have a situation to where when the HVCC happened, it removed the brokers from ordering appraisals, which I think most people thought was a good idea. But then secondly, what had happened is a lot of the community banks, because of the Dodd-Frank, started shutting down. So just to give you some ideas, in 2004, there were about 8,000 community banks. In 2016, this is about 5,000, 5,500. Well, that represents, if you're an individual appraiser, that's where all you got your business, because these community banks, a part of their business plan is they're going to lend in, one or two counties. They really have a need for an appraisal management company, and they're in a position to where they're just, it's usually the owner's money of the bank or the investor's money. They lend niche products. Maybe they don't have their Fannie Freddie, and they portfolio loans. They have no need. I have buddies who own banks, and they have no need for an appraisal management company, nor should they. But if you look at the lending that's taken place in the last 5 years, it has been primarily through regional lenders, super regional lenders that are lending in 10 or 15 states, your net branch lenders who are under a huge umbrella, who are national, they have hundreds of branches across the country, or your online lenders. And your online lenders, are in a situation where they have, one phone call comes from West Virginia, the next phone call comes from Florida, next phone call is from Tennessee, and they need somebody that can just assign these appraisals right away. So if you're going to say, well, what would happen under a new administration? It's not going to be a repeal of AIR. It's not going to be a repeal of the appraisal independence. You're not going to see AMCs go away. But what you will see is community banks come back. And if I'm an individual appraiser going out and trying to solicit work and not use an AMC, it would be good for that. It's really not going to affect the current AMC model, nor will it affect the appraisal independence, because there's just no way. There's too many rules, too many overlays that'll go with that. So that's just that. I got a lot of questions on that. I've really thought about that per se. But then also sort of the next question is, what is going to happen for appraisals in 2017? So that is a little more of a loaded question, because you have so much going on in the industry right now. You have the Appraisal Foundation and the Appraisals Institute at odds. You have the ASU's role coming into question, whether it's the enforcement of state audits, whether that's the National Registry. You have a lot of conflict, and underline a lot of conflict at the state level as to which role and which structure the regulator should play in both regulating appraisers and appraisal management companies and a potential conflict. I think you're going to see a lot about that over the next couple of weeks. You have the idea of lenders starting to start a hybrid product, which I think personally is going to be something that is good for the industry as a whole. As an appraiser, the role of appraiser is something that's going to change, and you sort of have seen that already. People think, well, the appraisal industry, you're eliminating the appraisers, and you're this and you're that, and it's like, no. I mean, right now the appraisers are being used now more than ever, just in different capacities, right? So that's skill set, right? So 4 or 5 years ago, when I walked into a lender, very rarely, if any, had any sort of chief appraiser. Now, almost every lender has a chief appraiser, and every major bank has a chief appraiser, and most of our clients have multiple appraisers on staff. So this is where appraisers are starting to take on additional roles, but not just in the pure appraisal space, but really kind of like a valuation risk specialist. So they're doing a lot of different things. And some of these people, and some of the models and the spreadsheets and some of the stuff they're putting together, very valuable to lenders that they want to see. I also think that you're going to start seeing some hybrid products accepted by the secondary market. Lenders are warming up to the idea of a hybrid product and have a data-driven approach, and it'll start to gain some steam. It's already being used right now in sort of some niche markets, but I think you'll see bigger adoption as they become more widely used in different segments. So something like a HELOC market, which is a desktop or hybrid product would provide tremendous value with a limited scope. Some of that's going to follow the state regs or the lender to investor regs, but ultimately I do think that's something you're going to see and start to happen in 2017. I know we're already working on our product and been testing it for quite some time, as well as some of our competitors have already had products. We waited for them to sort of spend the money on investing it. Now the technology's there. There's a very clear path to that area. So I think overall, and we're going to do a follow-up webinar because it was so well attended, but those are the questions I got. I just wanted to do a video for people who had those questions to hopefully give you guys some answers. But in this short, the appraisal industry, I think, is going to go through some positive changes over 2017 and 2018, and you're going to see a much better profession as it comes out of it. When you look at the last 5 years or 7 years with the current situation, a lot of it has just been the adjustments on the regulatory requirements and figuring out a really futuristic model. The old way was not working, and that was apparent back in 2001, 3, 4, 5. The new way, I think there's still some problems that need to be fixed, but again, it's going to be a progressive thing. It's not going to happen all at once, and that's where you're starting to see the positive changes associated with that. So thank you, everyone. Brian Coester, CoesterVMS. Share, like, comment. Any questions, email me, bcoester@coestervms.com. That is, again, it's bcoester@coestervms.com. Have a good one.